All right, good morning. We are on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. And Jim, before we begin, we have a special guest, Canada Goose CEO Dani Reiss. Dani, come on in.
Dani, great
welcome.
to see you again. How are you?
I'm awesome. How you guys doing?
Great. You know, Dani, a lot of people misunderstand Canada Goose. They think, okay, as soon as it's warm, that's the end. What you've done, I want to describe to our viewers, is this is not a three-season no, one-season go situation. You're building a much broader platform.
Yeah, well, you know, our products are relevant, certainly 3 seasons a year, and you know, any weather has never affected our ability to achieve our targets. You know, I mean, I think what's important today, first and foremost, is we're here. We're fortunate to be invited back to the stock exchange. We went public almost a year ago. It's been 11 months or so now, and today's International Polar Bear Day, and we're a big supporter of Polar Bears International, and we believe that it's important that doing good is it's important that business does doing good. The business does well for the world, right? And we think that's an important tenet. And today, February 27th, is an International Polar Bear Day, and it's great that the New York Stock Exchange would help us celebrate that.
Now, you are Canadian, and I point this out because there's a authenticity issue in our country and around the world. People don't want to have someone be cold weather and it turns out they're made in a foreign country that may not have necessarily the culture that you have. Can you talk about the family culture that inspires your business?
Yeah, well, I think made in Canada is very important. You know, if you came to our factories and walked through them, you'd find that there are craftsmen there who've been working for our company for over 50 years. People that my grandfather hired, and I think that's really important. And I think that from my point of view, we have a long-term view on our business. We don't look on a quarter to quarter. And I've been communicating that to the markets for a long time, and since before we even went public. But we aren't about to start looking at our business on a short-term basis. We look at our business annually and really generationally. And we believe that we have an opportunity a lot of growth opportunities and a real opportunity to be an enduring brand for decades and generations to come.
The stock sold off after the last quarter, which was an excellent quarter. Did you sometimes think, oh boy, these public markets, how short-sighted they are? Don't they understand that we're going to be doing all different forms of clothing? There's spring line, there's going to be lines that make it so that you may understand the quality of the product is across a lot of different aisles of the store?
Yeah, I think overall the markets will come to understand our business model. I've been saying over a long period of time that we're building long-term value, and I think that we don't look at short-term permutations, and over the long haul we're focused on creating long-term shareholder value, whether we were private or public. We're focused on that. We always had been, and we continue to be, and I think that that's the right approach for a public company. I encourage more public companies to take that approach.
And just jumping off of Jim's point, there was talk that maybe Canada Goose will get into products beyond outerwear, like shoes and bedding. Any more details you can tell us about that?
We just launched this year. We launched a knitwear collection, which did well for us, and that was in fall, and our consumers really gravitated towards it. It was a very positive thing and a positive new product launch. And this spring, knitwear is now in stores for spring as well, so it's our second knitwear collection. And there are lots of other product opportunities, as you mentioned. We're very careful when we get into new products. We take our products very seriously. That is our reputation, is the products that we make, and we want all of the products that we make to be best-in-class products. And as we find the right way and the right alchemy to make the new products, such as footwear, for example, which I would love to get into one day, but there are no immediate plans to do so. But when we find the right way, we'll certainly do that. And most importantly, we have to make best-in-class products, and we will.
I know that you can't speak for your fellow shareholders. The really terrific private equity has been way behind you. But when you catch a double, you catch a double. Do you think some people are just concerned there'll be people who say, look, I have to be realistic. I want to take something off the table, some of the insiders. Or is that just they too, as you told me when we met in Florida, they're not going anywhere?
Yeah, I think that I can't speak for other shareholders. I speak for myself, and I believe in this company and in the long-term value that this company provides. And I think that as for my partners, my private equity partners, they've always been responsible in how they've exited companies, and and I expect no different in this case.
You know, we were a supporter from when you came public. There were many companies that came public during that period, and yours was the kind of company I looked for, which it didn't come out hot because people were saying, well, it's one time only. And then people started seeing, including my wife, everyone started seeing, of course, the signal. And what I'm trying to get people to understand is that if it's 60 degrees and you don't see it, it doesn't mean people aren't still buying it.
Yeah, we're global, right? And so it's cold somewhere, and we have retail locations around the world now. We have our own. We have e-commerce platform, which is doing really well for us, and all of our direct-to-consumer platforms have exceeded our expectations this year, and you know, that's what we're really excited about, and we think that, you know, we have a lot of runway ahead of us in a lot of different directions. So
well, terrific. Yeah, I couldn't agree more. And congratulations on all your success and for being true to your mission.
Thank you very much, and thanks for taking the time to talk to me.
Dani, thank you so much. We appreciate it. What a company.
Yeah, thank you very much.
Jim, and you see them all over the world. I'm sure you saw the coats in Italy.
Right, and absolutely, really. You know, we had 33 to 34 degree weather in Florence. And what do you see? People walking around with Canada Goose. And by the way, not a lot of Americans there. When a stock comes down like this, it's important to remember that there are people who just say, I cannot have a stock go from 16, 17 to 38 without taking something off the table. I also think that there are people who will say it is a one-trick pony. It's clearly, as you heard from Dani, not. It's going international. I understand the decline in the stock, but more importantly, what I understand is that what he said, the long-term commitment. We do not have a lot of good apparel companies to lean on. We have PVH, Manny Chirico doing a fabulous job. VF Corp quarter was not as strong as we like. Ralph Lauren trying to make a comeback. I want people to put Canada Goose, I want it to be in their repertoire. And I also got this amazing book from them the other day. It's a coffee table book about Canada Goose. This is a culture that is a stock. And I think that's very different from people who have a company that also happens to be a stock.
All right, we'll watch how Canada Goose plays out. Jim, let's stick with the consumer. We've got Macy's earnings January. What a month for them.
Look, Jeff Gannett is the real deal. We've been saying that since 19 is when we went out and said, okay, enough is enough. It was yielding 7 and change. And what Jeff did, I'm going to just give you the arc of what Jeff did, Jeff Gannett. The company had been spending a fortune on their omni-channel, really wasn't working, and they were buying back a lot of stock. And what Jeff said is that first, let's get the balance sheet in order. He has substantially cut the amount of debt. He said, then let's go after the look and feel of stores, make them more relevant to their neighborhoods, whether it be Short Hills or whether it be Queens. Or around the country. Then let's look at the excess real estate and see what we can monetize. Fabulous job he's been doing, including actually floors. Now he is going on the offense. He's addressing comp store sales. He's saying that they will be positive in 2018. He is a conservative man. Remember, this stock fell from the 70s, where it was propped up by private equity guys trying to get something done, all the way down to the teens. I think Jeff is really, really good. I think the omni-channel is working for them. They're using technology, but go to the stores and you'll see what I mean. The stores look better. This is a person who is about fashion, he's about look and feel, and he's about making the stores more fun. I really like him, and I know his employees do too. Now that's somewhat more anecdotal than empirical, but there's a different Macy's. It's a better Macy's, and that's being reflected in the stock. There's some people already saying, well, it's as good as it can get. My family, my father worked at Gimbel's, and my mom worked at Litz, and my father spent a lifetime in retail. And when you get a turn in retail for a quarter, it's never just a quarter. That's one of the things I've learned. It tends to be longer live, as we're seeing with Kohl's. So, I mean, look, there are going to be profit takers in Macy's. I want you to be there. I've been saying it since 19. I'm going to reiterate right now.
And now that we have Macy's, what are you expecting from Nordstrom, JCPenney, Foot Locker this week?
You know, Nordstrom, we own it for action alerts. I think that you can win 2 ways here. I think that what's happening at Macy's could happen at Nordstrom. Macy's, I think, was more depressed. Nordstrom stock never went down, in part because of the chatter about them going private. You're going to hear a story about a renaissance of New York itself. Remember, Macy's, Terry Lundgren often talked about the decline of the tourist because of the strong dollar. The dollar's gotten much weaker, the tourists are coming back. Isn't that a great time for Nordstrom to open a brand new palace in New York City? Plus the rack is doing well. I think the company is being undervalued by Wall Street. If I were the company, I would take it private, given what we see from Kohl's, given what we see from Macy's, but we have to learn more. Matthew Boss with some terrific research, even suggesting that JCPenney could be good. Look, at $3 stock if you want to do a spec. Foot Locker, I said in my game plan last night, if you look at how Nike's doing, by the way, 52-week high, if you look at how Under Armour's doing, and if you look at how Adidas is doing, it's certainly possible that Foot Locker can deliver. I happen to like what Kevin Plank's doing in Under Armour. I think he's a competitor. But retail is, the companies have now leveraged technology to become much more savvy. Brick and mortar has a place. I also think that I would refer to a note by Howard Schultz shared with his employees about the idea that rents are going to finally start coming down as the real estate investment trusts break ranks. If you listen to the Tanger call, and Steve Tanger is a remarkable operator, you will hear the analysts saying, come on, the concessions are coming. It's positive for Starbucks too. Not currently owning Starbucks for Action Alerts, but I do think that retail in general is going to benefit from lower rents, from a better consumer, and from companies that are leveraging the tools that other guys, Amazon Web had. Target had a very good quarter. The one worrisome one, by the way, is Walmart. Where we're hearing reports that Jet.com is not taking off as fast as it should. I had been a big believer in Walmart, and I've seen the stock pull back. It looks like the other ones are now doing better.
Okay, Jim, it's an interesting day with Jerome Powell on Capitol Hill. You say there are bears out there that want this market lower.
Well, look, if you take a look at the excellent presentation by JP Morgan today, and then you see the stock go down, you say to yourself, wow, is something wrong? No, the rate hike's going to be spectacular for JP Morgan and for the bank group, but we're up a lot, and bulls make money, bears make money, hogs get slaughtered. Even I, who have been bullish and managed to put together a lot of work and a lot of money for Action Alerts club members, as everybody who's a club member knows, when the market was down 8-9%. I'm aware of the scalping issue. Traders who got in at good points, particularly when the VIX situation broke down, they're going to be your enemy right now. They were very aggressive and they made money, so they're natural profit takers. But what I like is that Jay Powell's seasoned already. He knows what to say. Banker, lawyer, presence. He is a senior statesman at a very young age, and I would tell people, if you haven't gotten in yet, you don't want to chase, okay? That's a terrible thing. But when you get a JP Morgan was down $1 at one point, you have to be in. I know that sounds almost too glib to believe, but the bank group is very right, and we are kicking ourselves when we talk about it in Action Alerts all the time, that we didn't get bigger in JP Morgan. We were sticking by our discipline. Discipline can cost you periodically. We talk about that with an open hand. But I like what I'm getting from the banks. I like what I'm getting from the Fed. I like Jay Powell.
All right, Jim Cramer, we're going to continue the conversation. Please join us on actionalertsplus.com.